Hi and welcome to the Market Alert for Wednesday the 18th of August 2021. So stocks dump, dollar jumps as self-sustaining recovery narrative collapses. Gimme more stimmies. No doubt they'll probably oblige that one as we go into the winter, and personally I think this winter is going to be one of the longest and hardest and most difficult as well with the COVID situation, but we'll see. And then the knock-on effect to the markets is also going to be very, very interesting as well. October is the month for crashes, but given what's building around us at the moment with Afghanistan, the supply chains, etc., it's going to be interesting to see if the market will actually hold that long, to be honest. Anyway, the implied volatility, you're not going to see 1133 again for a long time. That was the low that we had for Monday. Yesterday we shot up to 1392, so I think in the implied volatility alone is saying that it's not looking good, Houston, as far as the markets are concerned. Today we've got the UK CPI. That will be interesting. That's forecast to come out at 2.3, 2.5 before. And then we've got crude oil inventories as well, which will also be interesting given what's going on in the Middle East at the moment. And then tonight we've got the FOMC meeting minutes. And what month are we in? We're just saying August. No, so there's no press conference tonight. This is just what I would call an ordinary FOMC. Every 3 months they have a press conference that follows, but not for today. So I don't think so anyway. Nope, there isn't. Okay, so let's have a look at the Dow. We'll start off with that and the daily chart of the Dow. You can see yesterday trading down to the 20-bar moving average before coming off the lows before the close and starting to move back to the upside on the overnight as well. So what I will be looking for here, now the market's showing some sort of a top and the volatility is increased, is from this top back. I'm looking for the failure around an 89% level, which I'll mark up there for you. In fact, the market's just about, I'll leave the 50% in there, to be honest. If the market hasn't hit the fib, then I'm going to keep it in so I can see how strong it is should prices attempt to move up. But the key here is the 89% retracement is where the market generally fails. We've had this other last spurt to the upside. We've had the new record high, and it's a case of now trying to establish if this market's got any strength to move up or we do this. So it'll be the same for the DAX, which we'll look at in just a moment as well. So there you can see yesterday when the Dow kicked off, it used the industrial production to its benefit, but it only lasted 30 minutes before the market then sailed southwards. But then overnight the market's been brought back, no doubt in part due to the plunge protection team assisting with the overnight move. So in the German DAX, in the daily chart, you can see a similar thing, not as aggressive to the downside, but attempting to move back to the upside as well. So let's just mark this up as well. From there to there, we're through the 38, so you can see it's a bit stronger, and the 50, and we're just at 62 at the moment. So I will be looking to see how the market holds at this level and price point. So at the moment, I'll just clear these. So at the moment we're attempting to move higher. We've also got some buying coming in here because the market came off the lows as well, and closing back above the 5-bar moving average for the DAX at the moment. In the 30-minute, to have a look at the bigger picture, you can see overnight the futures have traded up to yesterday's high in the R1. Depending on the retail sales from the UK, which will be released in about 15 minutes time, which will be out before you receive the market alert, unfortunately. We'll see how the market reacts. So you can see overnight low volume, just marking up the futures contracts. That's all that is. So don't be surprised if we do see some weakness in the futures. And in the metals, let's have a quick look. Starting off with silver, you can see that we're sort of sideways to high. Now the dollar puked apparently. Let's have a look at that. It rallied, didn't it? The stock market dumped and the dollar rallied. Now that's interesting. I'll come back to that in just a second. I've not looked at these. Normally I have a look, but I'm slightly later this morning. I want to get this out. But we've got silver still above the 5 bar, and interestingly enough, given how much the dollar moved yesterday afternoon, they didn't seize the opportunity to actually slam it as much. So yeah, interesting there, because you've got a situation that I'm just been talking about with regards to looking for a potential top in the stock market. So let's just move this over so you can see it. I'm just going to delete all of these here and then just mark up from the high to the low, and you'll see we've just got through the 89 yesterday to double top, but the 89 is showing a resistance at the moment for the overnight trading below it, and this is what you're looking for in the stock market, but with the prospect of it hopefully correcting, given, like I say, what's escalating in Afghanistan at the moment. And then finally in gold, also holding its own at the moment, and again that's supported by what's going on in Afghanistan. The uncertainty of war or anything related to war is always a support for the metals. Of course, it's a safe haven. Okay, a quick look at yesterday's action. Let's just rewind, and you can see that I spoke about the low yesterday in the market alert, how important it is, and that we were likely to see the market attack this area. And when we kicked off, that's precisely what happened. The market came down, hit this, and in here I'm looking at the daily chart just to see where we are, and again you can see we're at 62%, just traded through the low as well, and we start to see the buying coming in there as well. Big bar of volume, and then it's retested, and then the market comes back, breaks through the 5 bar moving average, trades sideways, puts in a potential buy signal. The market moves up towards the high of the open, which you can see there, the opening bar, and then starts to trade sideways and decide to get out with a tiny profit. The market comes back, has a second look, and then trades sideways. And then this second trade is very interesting. You'll see how the market had no interest in moving this market to the upside. It filled the trade, and then just watch the volume in this bar. You can see that it's higher than the previous bar, the range is slightly less, and there's absolutely no interest. We're back to where there's resistance, and then they just reverse the market from this point, as you'll see there, starts to move lower. So that one, not a good one, but guess what? So what they do is they just come back down, they test it, and then they decide, you know what, let's bring the market back, and they move it up through the 10 o'clock session there, and manage to bring it back towards the DP, and then the market sits sideways waiting for the retail sales, which I'll just fast forward to. A very tight range as the market was waiting to hear what Powell was going to say. He was speaking in front of educators and students at a town hall event apparently yesterday. So we now get to the retail sales. These came out worse than forecast. In fact, I'll show you the figures. Let me just go back. So here we go. There's the retail sales. They came out at minus 1.1, minus 0.2 was forecast, and minus 0.7 before. Industrial production, whilst we're here, also came out better than forecast, 0.5, 0.2. So that was released at 1:30, and you can see the market said, okay, it's bad, but let's discount it. Don't worry about it. Don't worry about it. The industrial production might be okay, so just hang in there. Then the industrial production figures came out, and as we saw, they were the biggest rise since March of this year, and the market then traded sideways. Catastrophe averted. The retail sales, forget those now, concentrate on the industrial numbers. So the market attempted to move higher to begin with, got stuck at the DP, then the Dow had its 30 minutes, and then it started to sell off, and you'll see that the DAX didn't actually follow. Initially it just traded sideways to higher, back up to the DP where it was finding resistance, but managed to break through and head towards the close before it was then forced back to the DP as the Dow was under the cosh at this point. Okay, that will do it for this one. Let's see what the market brings today, particularly the CPI figures from the UK, which were released earlier this morning. Okay, that's it for me. As ever, thanks for watching. See you in the next